Hey everyone, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to follow and leave a 5-star rating. All right, folks, we got to kick it off with President Trump's and Vice President JD Vance's crypto holdings. So they had their financials and investments disclosures come out today. And of course, it includes crypto. Now, President Trump has a significant amount of exposure to crypto, but this should come as no surprise. We know he has been involved for a long time. So has his kids, Eric and Don Jr. Here are some details as far as what Trump is holding. For Bitcoin, over $100 million of Bitcoin in his portfolio, over $55 million in Ethereum. For the World Liberty financial token, over $50 million. As far as stablecoins, it has here over $5 million. And then collectively, a bunch of altcoins worth over $1.5 million, which includes Link, Aave, ENA, Move, and Ondo. So I don't necessarily have an issue with this. I do have an issue with the meme coins, right? That's the one thing you guys know I've been telling you all that no elected official should have such a thing. Now, JD Vance, his disclosure showed he has between 250,000 to 500,000 in Bitcoin. And again, they own stocks and other stuff. But this is a crypto podcast, so we're going to talk about that. So as mentioned, my issue is primarily with the meme coin because both the Trump and Melania meme coins are down like over 98%, down pretty much like they look like rug pulls, right? Like big fat L's on the charts. And that's not a good thing. And I've been saying for a long time, I wish President Trump didn't do that because he has done a lot for crypto, but it gets overshadowed by all the other stuff that he's doing, such as the meme coin, which his political opponents can use against him. And that's where I'm concerned, guys. The timing of this disclosure does not help the Clarity Act. Why? Many Democrats, like Elizabeth Warren and others, are already beating the drum about the ethics issue as it relates to crypto. Now, we've been talking about it ad nauseum. There's a larger ethics issue that needs to be addressed within Congress and for elected officials, right? Because guess what? They can trade stocks, oil, gold, and much more. It's not just crypto. In fact, crypto is probably the smallest part of the whole asset distribution because many of them have been trading stocks for a long time, a la Nancy Pelosi. And look, Trump is doing the same thing, right? So we need to have a bigger conversation and a bill that encompasses all asset classes. But because the Clarity Act is on the table, we know it's going to be on the Senate floor next month, which starts tomorrow, July, right? July 1st. It's coming up for vote. Could the Democrats say, look, we have the details here. Trump conflict of interest. Here's all his disclosures. He has X amount of hundreds of millions of dollars in crypto. You know they're going to use this as ammo. So I'm a bit concerned, guys, because the Clarity Act is facing headwinds that includes the ethics issues, but also the banks are fighting hard. We know they're going after DeFi and the stablecoin yield. Jamie Dimon, visibly frustrated and angry in his interviews, saying the bill is no good as is. So we got a fight on our hands. And unfortunately, this does not help us because Trump's political opponents, and again, I think they're just playing the game of politics because there's a lot larger ethics issue, but he's giving them the ammo here, which really sucks. But, hopefully they can find some sort of compromise to not let the ethics issue be a major headwind. So something to think about, guys, and just be prepared that they have the details now of how much crypto this President Trump is holding and much more. So we shall see how it all plays out. Nevertheless, guys, we've been tracking the market, and obviously I've been saying we're near the bottom. I don't know if the bottom is 100% in as yet. We're going to have to let the market show confirmation, but we're seeing things like the bullish divergence on the weekly chart for Bitcoin, the bearish divergence on the stablecoin USDT weekly chart, right? So you're seeing the inverse correlation there, plus the supply of Bitcoin underwater in unrealized losses at an all-time high. So a lot of big players are starting to accumulate. And here, Grant Cardone via Cardone Capital, they bought another 282 Bitcoin worth $16.5 million. They now hold over 2,700 Bitcoin. Now, Grant is actually doing something unique. You may have seen my interview with him from earlier in the month. where he's pairing a portfolio which includes Bitcoin and real estate, which is very unique. And that's how he's pitching it, that you have exposure to these two asset classes. So he's doing something very unique. So you have big players like him accumulating. And here we got news that the UAE-based Goldman Lampe Private Bank purchased 120 million euro of Bitcoin. They said Bitcoin continues to demonstrate remarkable resilience as a store of value and strategic asset. So you got banks buying, you got big wealthy investors, funds, and much more. And the on-chain data is showing confirmation of big money's buying. So Whale Holdings for Bitcoin just put in the largest spike in history. So the data shows whales have accumulated around 270,000 Bitcoin in the $59,000 area. So they're buying the blood on the streets, right? This may be the bottom or maybe not, right? Obviously, the Bitcoin's price went below that. It went to 58K. Now, there is the possibility it could wick down to 54K or 52, right? We can't rule that out, but there is also the probability that the bottom is in, and that's why I've been saying no one can call the exact bottom, but when you identify the bottom zone, which I think we're in, it's a great place to start accumulating. And I've been telling you guys, I've been buying altcoins, so I think the bottom is near, and we're going to continue to monitor the charts and the on-chain data. And we have to be patient. Obviously, expect volatility. It's par for the course. And there is the possibility, like I've been saying, that Bitcoin starts to rally because it's oversold. There's extreme fear. And you have the narrative of the Clarity Act, where you can have a buy the rumor, sell the news event that makes this relief rally very strong in July, maybe bleeding into August. Then you have a correction. You form a higher low, or the possibility of going lower, right? We can't rule that out. You have to look at all scenarios. As smart investors, you got to look at all scenarios. Obviously, as we get closer, we'll look at the metrics and say, well, which scenario has the higher probability of playing out. But there is the possible of going lower than 58K, and if we don't go right now, and then we start, the recovery, the true recovery. So we're going to have to be patient and see how it all plays out. But like I said, I'm buying the dip. And guys, a great place you can buy the dip for crypto as well as precious metals is on iTrustCapital. They allow you to invest in crypto and gold and silver via an IRA. And you may say, why would I want to do that? Well, when you sell your crypto or your gold, you incur capital gains taxes. When you do that in an IRA, there's no long-term or short-term capital gains taxes. So if you have a long-term view on these assets, this is a great option. You can buy and sell 24/7. It's low cost, no monthly fee. And if you have an existing 401k or IRA, you can simply roll it over to iTrustCapital's version. Now, their gold and silver investment offerings is not paper gold and silver. It's the physical asset. So if you ever want to redeem it, you can do that. It's custodied at a bank. So this is a great option. A lot of platforms do not offer this. And they also have a premium custody account that you can store your assets and not have to worry. You can buy and sell your crypto 24/7. It's a closed loop system. So if someone hacks into your account, they can't withdraw funds. And they use Coinbase Prime and other big institutions for custody. We know BlackRock uses Coinbase Prime. So you're getting that tier 1 level custodial service, and it's low fees. And folks, if you sign up with my link, you can get a $100 funding bonus. And I also put in the description my contact at iTrustCapital. So if you have any questions as you're signing up, that person can help you. His name is Ryan, and can give you a bit of a white glove service, right? Hold your hand through the process and answer your questions so you don't feel alone. And if you are curious about something, you can just send an email and contact that person. They can help you. So the contact information will be in the description. And folks, to learn more, go to itrustcapital.com/go/thinkingcrypto. Link will be in the description. Okay, moving ahead, folks, we have a massive news item. A new stablecoin is on the block here. So dozens of financial firms, including Visa, Stripe, MasterCard, BlackRock, and Coinbase, are launching a new stablecoin called OpenUSD, and the ticker symbol is OUSD, sharing revenue among the partners. This is being reported by Bloomberg. So many of you may say, wait a minute, isn't there something else like this where you have a consortium of big players who have launched a stablecoin? Yes. Many of you may recall, I believe it was last year that the Global Dollar Network was launched, And that is a stable coin similar to this. You have these financial giants, so it includes Robinhood, Galaxy, OKX, Bullish, Paxos, and others, and they're all sharing in the network value of that stable coin. So this one, is pretty big because you got Visa, you got BlackRock, you got MasterCard, big names, especially BlackRock, right? And I'm surprised Coinbase is a part of this because Coinbase is heavily tied to Circle and USDC, but they may be looking to diversify and get more exposure rather than be tied to just Circle, or joined to the hip there. And in fact, on that news, Circle's stock price sank 16%, and competition is heating up here. Now, does this mean Circle is going to immediately lose market share and it's going to be all downhill from here? No, because Circle has a head start. They have a lot of distribution, guys. They're already on many blockchains already and getting distribution amongst different companies and platforms. So OUSD has its work cut out for it. However, the powerhouses who have the billions of customers combined together and the partnerships and the rails, they could fast track this, but we're gonna have to see how it plays out. This is good. Competition's good, right? And if BlackRock, the world's wealthiest asset manager, is backing this and they're involved, they're gonna do the best they can to make sure it gets the most adoption, and they want to collect their fees, and they're gonna share in the yield that they're earning and all these things. So this is a fascinating one. Here's what the folks at MasterCard published about this news. Stablecoins are becoming an increasingly important part of the global financial infrastructure. Today, MasterCard is supporting Open Standard and Open USD, an effort to help build more open infrastructure for digital money. We believe unlocking the full potential of stablecoins will require trusted networks, broad participation, and collaboration across the industry. This is a huge one, guys. Something to pay attention to. Again, look at the players involved. And we're going to have to see which blockchains they roll out on. But the folks at Ripple, kind of give an indication. It looks like XRP Ledger might be involved. So they said stablecoins are transforming how value moves, and interoperability is the key to institutional scale. We're proud to join OpenUSD as a day one integration partner, reinforcing Ripple's commitment to open multi-chain infrastructure that supports institutional adoption across the digital asset ecosystem. Now, I know some people are going to have the knee-jerk reaction. Wait, doesn't Ripple have its own stablecoin, RLUSD? What's going to happen? Calm down, right? Remember, there's not going to be one stablecoin to rule them all, not one chain to rule them all. The world is a very big place, and I believe different industries and verticals and regions will use, specific stablecoins or stable coins, right? Multiple. So it's not going to be one and no one else can exist. So RLUSD is already being used in Ripple's network of customers. And yes, could OUSD be used as well? Yeah, but also Ripple's looking at the opportunity of positioning the XRP ledger to be utilized. And also Stellar, and you guys may have caught my interview with Danelle Dixon this morning. I published that. Be sure to check it out. Stellar blockchain is going to be leveraging the OpenUSD setup or network. So these stable coins have to run on multiple blockchains. So please understand it's going to be a multi-chain world. And anyone that's telling you there's going to be one blockchain to rule them all, one stable coin to rule them all, they're lying to you, right? That is not realistic. So really great to see this. Ripple's president, Monica Long, weighed in saying the future of payments will be multi-chain, interoperable, and built on institutional-grade blockchain infrastructure. Our focus is simple: continue making the XRP ledger the leading blockchain for institutional payments and a natural home for the next generation of key regulated stablecoins, while growing the utility and adoption of RLUSD and XRP around the world. So again, this is a very big project, guys, something to keep an eye on. I mean, look, Stripe, Visa, MasterCard, BlackRock, huge, huge. And let's see what Coinbase does, because again, they've been promoting USDC for the most part, but this could be a way for them to diversify and continue earning revenue and not just be dependent on Circle and USDC. Now, staying on the topic of stablecoins, MetaMask launches a money account with stablecoin yield and spending in one wallet. So the innovation continues. The competition's heating up, guys. This is really great and a great indication of where the asset class is heading. Everybody's trying to grab as much market share. So MetaMask has launched a new self-custodial account that combines stablecoin yield, payments, and trading in a single product as wallet providers increasingly compete to become broader financial platforms rather than simple crypto storage tools. The new money account announced Tuesday by MetaMask parent Consensus is built on the Monad blockchain and allows users to earn yield on stablecoin balances while spending funds through the MetaMask card at merchants that accept MasterCard. The account is centered around MUSD, MetaMask's proprietary dollar peg stablecoin. Users who opt in can earn a variable annual percentage yield of up to 4% by having deposits automatically allocated to decentralized lending protocols, including Morpho, with Aave integrations plan. Consensus said users retain custody of their assets throughout the process. So again, takeaways, competition, more stable coins, and notice that yield. That's what Jamie Dimon doesn't like. That's what he and the banks are fighting, right? How dare you go earn 4%? We're the only ones that can do that. And we keep the majority of the money and pay ourselves big bonuses. And you have to take the breadcrumbs, 0.01%, right? While we pocket the majority of it. That's the fight that's happening with that stablecoin yield. They hate that you can go on a decentralized self-custodial wallet and platform and do that, guys. But disruptive technology is here and it always wins. Moving ahead, the Nasdaq expands distribution of its market data into blockchain infrastructure. So the stock exchanges, the banks, the biggest financial institutions, all getting involved with crypto blockchain tech. It's amazing. I've said many times, I've got into the crypto market in 2016. I couldn't imagine headlines and news items like this. This is incredible stuff. So the Nasdaq is expanding the distribution of its market data into blockchain infrastructure, making one of its flagship equity data products available through the Pyth network as financial firms increasingly build trading and settlement applications on blockchain rails. Guys, as I've been preaching nonstop, the future capital markets, economies, and governments will all run on blockchain rails. The exchange operator said Tuesday it will publish its total view market data through the Pyth Data Marketplace, a platform that distributes institutional data assets to blockchain networks, financial applications, and software developers. The move gives a wider range of users access to one of Nasdaq's core market data offerings through a programmable interface rather than traditional market data delivery channels. I hope you caught that final sentence there. Through a programmable interface rather than traditional market data delivery channels. Again, blockchain rails powering all these things, new innovations happening, and moving away from the analog system and those antiquated systems, and blockchain-driven data giving you real-time, trustworthy, transparent data moving 24/7. So Total View provides full depth of book data showing buy and sell orders at every price levels for securities trading on the Nasdaq, including Nasdaq NYC and regional listed stocks. The products also include Nasdaq's net order imbalance indicator, which offers a real-time view of buy and sell imbalances before the opening and closing auctions. Incredible. Guys, this is news you have to share with the skeptics who still think, they're like, oh, this is all a scam. It's only used for money laundering, right? It's only used for Trump and his blah, blah, blah. No, this technology, like the internet and other technologies out there, is disruptive. It's the future, but you have to get past the headlines. You got to educate yourself. The reason these tokens exist, and yes, some of them are garbage, like meme coins and much more, but there are legitimate coins that are on public blockchains. And the reason they're there is to help the public blockchains to be decentralized and to function. It's kind of like what happened in the dot-com boom. You had great companies like Google, Amazon, eBay, and much more, but you had crap companies as well. No revenue model. They were spending millions in advertising, raising a lot of capital, but no business plan, no real revenue being generated. And we know what happened. The bubble popped and 80-90% of them died. But you had the cream of the crop, the 10% that obviously changed the world. And then, beyond that came Web 2 after Web 1. And you had social media platforms and mobile apps and much more, right? So this is where you gotta be financially educated. You gotta do the research yourself. And that's what I try to do here on this podcast is to bring the facts and the information so that you can be informed and knowledge is power. So you can know where to make your moves as far as investments. You can get a sense of where the market's heading. Is there progress being made? Is there adoption happening? Yes, indeed. Now, if it wasn't happening, let's close up shop. Let's get out of this, right? But this technology is here to stay, guys. And we're seeing, again, the biggest institutions building with it while you still have people out there just twiddling their thumbs like, oh, this is all a scam. I heard this guy from the OC, Ryan from the OC said this is all a Ponzi. And it's like, really? Come on, man. Many of you know who I'm talking about. The actor, his name actually escapes me right now, but he was in Gotham, the OC. He's an Elizabeth Warren lackey, and he's been going around, saying a lot of negative things about crypto. But obviously, he shows up in the bear markets, but he's been wrong every cycle, and crypto is hitting new levels of adoption. Okay, moving ahead. New York Life Investment Management makes first tokenized move partnering with Centrifuge on high yield corporate bond strategy. So, again, the biggest names here, man. It's just amazing what's happening. New York Life Investment Management, the $807 billion asset manager, and Centrifuge have launched tokenized NYLIM Anemoy US high yield corporate bond segregated portfolio. Oh my God, that's a mouthful. What a long ass name that is. The fund is not just New York Life's first tokenized fund, but also one of the first to target high yield corporate bonds. So, again, why are they doing this? Right? It's all a scam? No, the blockchain infrastructure is going to change the way these products are going to be distributed to the world and how they can run because they're going to be able to run 24/7 and what you can do with them and putting them into DeFi and much, much more. So they're all going on blockchain rails. All assets are going on blockchain rails, guys. So this is incredible. And again, look who's involved, right? So the redemptions will be settled in Circle's USDC stablecoin. And look at what they're tokenized, corporate bonds. Come on, guys. I mean, I hope you guys are seeing it. If you're still on the fence, man, please wake up. Look at what's being built. This is I'm not making this up. These are facts. These are real companies doing real things here with the technology. Now, final news item. Taiwan's legislature has passed a new law establishing regulatory framework for crypto, including rules for crypto trading platforms and stablecoin issuers. The bill now awaits the president's signature. Guys, all across the globe, this is happening. Obviously, here in the United States, we're on the cusp of getting the Clarity Act passed in the Senate. And yesterday, I reported to you guys the UK put out their rules, and they put out they even rolled back some of the heavy restrictions they had on stablecoin issuers. Do you see where the whole world is moving towards? Right? This is not making the big headlines on Fox or CNN or wherever you get your news or mainstream media, right? They're all distracted by this and that and fairy dust and all kinds of stuff. But this is where you want to lock in. If you want to make some money, have some money for your retirement and position yourself accordingly, you got to pay attention. So this is why, again, this podcast exists to bring you this news. So incredible, incredible. Both large and small countries and jurisdictions all getting on the same page here. And I've been saying for a while now, many of you know that for the first time in crypto's history, we have the largest on-ramps because of stock exchanges, banks, and major financial institutions have built them, right? You have ETFs and much more. These things never existed before. Then you put the crypto legislation in place. That gives the clarity for more capital to come in, more building. So the things we're seeing right now is just the tip of the iceberg. So that's why I'm bullish. I have the macro view. Yes, the price sucks right now. Yes, the market's down, but markets are cyclical. We're not going to be in a bear market forever. So that's why I'm dollar cost averaging in. Obviously, do your research, right? You got to make sure that you have that macro view and you check your emotions at the door because the market volatility is stomach churning. It can get you to panic, but you don't want to panic, right? So this is where, again, have that macro view. It's incredible what's being built here. We are so early relative to the other asset classes that are out there. So, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, subscribe if you haven't as yet. Be sure to support the podcast by subscribing to my free email newsletter on Substack. It is 100% free. Check out my book on Amazon. It's available in paperback and digital. And you can also check out my course at mycryptocourse.com. This is a course that teaches you everything you need to know about crypto and blockchain tech. It features expert commentary. No other crypto course offers that. Right now, we got a huge bear market sale. You can get 50% off the price of the course by using the code BEAR, BEAR at checkout, and you can get that 50% off. So again, knowledge is power. Check out the course, guys, and take advantage of the sale that we got going on. It's not going to last forever. So it's just a bear market discount because I know we're in a bear market and I want to help out where I can. So again, go to mycryptocourse.com. All the links will be in the description. Folks, thank you for tuning in. I appreciate you all, and I'll talk to you all later.